Okay, so before I'll talk about what confirmations look like, I want to do a recap of everything that we've that I've talked about before. We said that an uptrend basically has higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And we said that when higher highs and higher lows are interconnecting like this, and then market breaks one of the lows, the last previous low, and makes an inducement here. This is a break of structure here. This is a break of structure because market did all of this. In a situation whereby you see where market did something like this, then it comes up here and does something like this, and then breaks structure here. This is not a break of structure because this low here is on its own. It's not connecting to any of the previous swing zones. So this low is on its own. So this is not a break of structure. So let's take note of this. This is not a break of structure, but this here is a break of structure. This here is a break of structure and not this. If we were to break any structure here, it would be here. This would be the break of structure for these markets, right? This is the break of structure for these markets. So the same thing applies for a sell where you have lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. Then this here becomes your break of structure. And you want to see an inducement and another break of structure. So this here is our break of structure. This here is our break of structure. But when you have this, and the market comes and does something like this, this is not a break of structure. This is not a break of structure. But this is a break of structure. Or let's say it comes down here and does this, comes here, does this, comes and does this. Then this is a break of structure. You know why this is a break of structure? Because it has a complete higher high, lower high, and lower low, lower high, lower low. They are both here. If it were just one sweep like this, it's not a break of structure. So I want you to take note of that. Um, Now let's talk about what the cell structure should look like. For you to have a structure, you must first of all identify, for you to say a market is something is a structure, you must first of all identify the order block, order block, right? And then secondly, you must identify the inducements close to the order block, right? These are the first two things you need to take note of. Now, how did we say an order block is formed? An order block is formed when market makes a sweep of liquidity and a break of structure. This is when, sorry, this is when you can say an order block has been formed. Another block has been formed here. When market makes this sweep of liquidity here, when you say sweep, it's just going above the high or the low and breaking and breaking structure down. That's what a sweep is, right? So if I say sweep of liquidity, this is what I mean. So when you have a sweep of liquidity and a break of structure here, and a break of structure here, this is a break of structure, right? Once that happens, you have an order block. But an order block is only made valid by the presence of an inducement, right? An inducement is what makes that order block to be valid. So once you see this, you want to see another break of structure down here. Once you see another break of structure down here, then you want to see market come and take out this one. Come and take it out. In taking it out, that's the aspect of the confirmation I'm going to talk about maybe when I finish this recap. So market takes this out and sells down this way. This is what a sell structure looks like. For a buy structure, you want to see a sweep of liquidity. You want to see a break of structure. You want to see an inducement. You want to see another break of structure. And then this comes down here and you have a buy structure here, right? Because you have an order block here. and you have a liquidity close to the order block that makes it valid, which is this. So you come here and this becomes your entry, right? Now, let me delete all of this. And that becomes your entry. Now, you can also have a sweep of liquidity that is like this. Let's say the market is coming from a downtrend and we have the market come and sweep this liquidity. Remember, we said for you to have a structure, you must have an A, and then there must be a B. There must be a B, right? So market comes to take out the B. Market comes to take out the B. But remember, there's no order block here yet. You would only have an order block if this market had been something like this. And then it breaks structure, and then it comes here, and then you have this. This is the only time we can say, okay, there was an order block here. Please take note of these differences. But this one is just a liquidity. There's no sweep here. It's just a liquid. There's no sweep here. Can you see? It's unlike this. This one, there's a sweep. Can you hear me?
Yeah, I'm hearing you.
Yeah. This one here, there's a sweep, right? This one, there's a sweep. But this one, there's no sweep anywhere here. It's just liquidity, liquidity, and just like, so you have your A and your B. So market comes to take out A and B. Now that market, that length of the market that is taking out A would have to create an order block for itself. And how does it create an order block? Is by breaking structure. Its own structure, not any other structure, its own structure. For it to break structure, it has to now do something like this. And then this place here becomes a break of structure. You want to now see an inducement close to that order block. This is what confirms a sell structure. You want to see an inducement close to the order block. You want to see an inducement close to the order block. Then this here becomes valid. This becomes valid. So either you wait for the market to take out this and come back into the zone, or it doesn't even have to do that. As long as there's broken structure here, as long as there's broken structure here and giving this inducement close to the order block, it can still come back into the zone and this becomes your sell, right? This becomes your sell. This is slightly different from this. Remember, this push here, this whole push here is like an inducement, just like this one is. It's just like this one doesn't have what an order, it doesn't have any order block because there's no sweep anywhere, it's just inducement. But this one has a proper sweep of liquidity, a break of structure, an inducement, another break, and something like that. So this is what a sell structure or buy structures look like. Let me show you this trade that we missed and how we could have gotten it. Look at these places. Let's start from here. There's what a breakup, because what you're basically looking at for is you're looking at for the last place, the last axis where the market has happened before, right? So if you're trying to buy in an option, you just identify all the higher highs and higher lows. That's the first thing to do. Identify all the higher highs. This is one, right? This is one here. This is another one here. You're just identifying them. That's another one. This is another one here. Just like that, just mark them all out. Mark them all out, right? Mark them all out and know where there has been a sweep of liquidity. Remember we said if the market doesn't have an order block, it will have to create one for itself. Now, let's draw that diagram again. You have, let's say you have, for a buy structure now, you have inducements here, no order block. Another inducement here, no order block. And then market comes to take out this liquidity. In taking it out, it can break structure in two ways. Is either it will come here and create a higher high and a higher low, right? And then it becomes your break of structure. It gives you a liquidity and another break of structure. Then this becomes your entry, right? This becomes your entry, or this can come up here, no wahala. It's still your entry. Or look at this one, broke structure inside there, or it gives you this liquidity, another liquidity, right? And then in taking this out, it doesn't form any inducement here, like a lower high, lower low. It doesn't form anything. It just comes here, creates an inducement here, and then break structure. Yeah, what do you want to say?
All right, so I want to confirm that this that you did, is it this that I'm seeing over here?
Yeah, exactly. That's what you're seeing here. But this is more likely what you're seeing there. This one here. This one is more likely what you're seeing here. Because it did not this structure did not break down here. It only created an inducement and then broke structure overall here. This was overall break of structure. This one BOS here. Right? This was where the sweep of liquidity happened. It swept this liquidity here, right? It swept it, and then this is where it came to break structure, right? But before breaking this structure, it created this inducement here and then broke structure. So this inducement validated our order block. This inducement validated our order block. That's why we can come and take this trade, right? It validated our order block. So the confirmation I thought you knew was that once market comes into this inducement that is close to order block, it has to make this move. Look at this move. It induces that zone and then sweeps it. As soon as it sweeps it, you wait for that's where you now look out for the bullish engulfing, something like this. Look at this one here. This is a bullish engulfing. Oh, hold on. You look for something like this, and then that becomes your entry. This is a proper bullish engulfing. You can see that this candle, this bullish candle, completely engulfs this black candle and even closed above it. So this is a proper engulfing candle after it makes this sweep here. This sweep it has to come and sweep this inducement here that it created for itself. It has to sweep it, that's induced, sweep it here. This is a sweep. This is a sweep here. You sweep it here. Once it sweeps and creates a bullish engulfing, that's your entry. Look at this on 30 minutes now. You can see the sharp bullish candle, right? This candle here is an exhaustion candle. It tells you that market has come to it's like an indication that the market is coming to an end, right? The trend is coming to an end. So this is a proper bullish engulfing. Even if you go to 15 minutes time frame, you still see the same thing. A proper bullish engulfing. Look at where the bullish engulfing happened here. You see it everywhere. Look at it here. This bullish candle engulfed this one completely. You're not considering the week, so you're not considering the week when you're looking at engulfing candles. It's just the body that you're considering. You're not considering this week, so you will not expect this bullish candle to cover all the way down to this week. No, it's the body that is covering. So once you see that engulfing candle, that becomes your entry. But like I said, this would have been a perfect, very perfect trade. Now, if this market is still going to give us what they call it now, give us a buy, like a buy continuation, right? We have a break of structure here. We have an inducement here. Let's see. What's the one? Now, this could be another entry. This one here could be another entry. Why am I saying it could be another entry? Because um we have markets giving us this inducements. Then this is our strip of liquidity here. And the market created what this inducement here. And then it broke structure. So if market comes back into this zone now, if it comes back into this zone, this order block has been validated by this inducement here. So if it comes back into this zone and sweeps this inducement like this, induces it, and then sweeps. As soon as it sweeps, that's your entry. As it's sweeping, you're taking your trade, and then you look out for, like I said, the bullish engulfing, and then you take it up to this next point. So this could be our next trade. This could honestly be our next trade. Um, One, two, three, four. Yes, this could be our next trade, right? So let's go to that V51s and see V50s. Let's go to V51s and see. Good. So we have the same thing. I think it's clear on 2 hours. It's okay. So this is a high. This is a high. This is another high. This is another high. This is another high. So what you're basically looking for is the place where market has made a sweep of liquidity, right? You're checking if there's an order block there. For this one, right, there's no order block anywhere. So market has to what? Create its own order block, right? Market has to create its own order block. And how does it do that? How does it do that? Because we had our point A here. Let's call this point A and call this point B, right? This could also be our point A. It could also be why, because they are still together. And this could also be our point B, right? If you're considering this point and this point, this is A and B. But if you're looking at it from here, this is still A and this is still B. Do you understand what I'm saying?
Yeah.
Yeah, good. So now we're now looking for where market made a sweep of liquidity, and that leg of the market that is making that sweep must break structure. It must break structure. It has to break structure. And how does it break structure? I told you there are two ways market breaks structure. When it takes out the B, this B here, when it takes out this B here, right? That trend must break structure. This trend here must break structure. So this is already a perfect trend with proper higher highs and higher lows, right? It must, this is now our break of structure here. This is our break of structure here, right? And this becomes our inducement. Then we can now see another break of structure. So once this market comes into this zone and does this, it induces, when I say induces, like it goes back into where it's coming from. Yeah, I don't know if you understand. So if I say it induces, it comes a little up here. As soon as it goes to sweep this liquidity, you start taking your entries, or you wait for the bullish engulfing. If you're not very certain, you can ask, okay, let me wait for the bullish engulfing. Once it does that from here, you have it going all the way up this way. It's as simple as that. Once you see that sweep, that inducement and the sweep here, this becomes your confirmation for the trade. This becomes your confirmation for the trade. So let's wait for this trade. I'm fairly certain, I'm almost 98% certain that this is going to be a perfect buy. I'm going to be taking this trade. So I've already funded my account this night. I'll take this trade.
How much you risking for this one?
I'm doing $150, but I'll take up to 10
Oh,
positions.
up to 10 what?
10 positions of 0.005. That is smallest lots. I'll take
Oh,
10 of it once I see the
so
confirmation I need. You're asking something?
yeah, but it's recording, so I'll wait.
Huh?
Yeah, but it's recording, so I'll wait. I don't want to mess up the
Okay.
recording.
Okay, good. So we see this. Let's consider another chart. Let's see. The more you look at the charts, right? The easier it gets. Like you can begin. Let's take a look at this V25 honest. I told you I wasn't comfortable with I think you sent this analysis to me and you were pointing out for a sell. When I looked at it,
Yeah.
I wasn't comfortable with the sell. Why was I not comfortable? Let's look at this thing closely. Let's know where market has actually broken structure. If we consider this from this zone here, this is a higher high, higher low, higher high again, higher low, higher high again. This one took it out, and then it came and made this higher low here, right? And then took this out again. And it has given us this market is actually very confused. That's not giving us this. So where can we see the market has broken? So, in fact, to the best of my knowledge, this market has not broken any structure yet. It hasn't broken any structure. Because for it to break structure, it's now as if what we have is just this here and this, because this low is lower than these 2 points. So it obviously takes them out. And you now have this. So the break of structure for this market is supposed to be down here. Supposed to be down here. So until it does that, I'm not very satisfied with what I'm seeing. I'm not very satisfied. But let's start the analysis afresh. Let's analyze as if we don't know what we are expecting to see in the market. So what do we start doing? We start looking out for higher highs and higher lows, and then we check for where there was a sweep of liquidity, a break of structure, an inducement, another break, and it will
All right,
shock
looking at
you.
this chart now.
It will shock you. This market is actually bullish.
Looking at this chart now, I'll start somewhere here.
Where?
Here as
Okay.
my higher high, uh, higher low.
Okay.
All right, so I would normally be looking at these here, but in earlier in the video, I noticed that you start um doing the little moves,
Yeah,
and
I do
then
them.
you
I do
have
them.
all of this as liquidity. So this would be, let's say, B,
It will be wrong. It will
A.
be wrong for us to look for a sell in this market
I'm
because
looking for a buy.
the market is bullish, very, very bullish. Like I'm
I'm not
looking
looking
at
for
it
a
and
sell.
I can see how this market is bullish. Like it's so bullish, I don't even know how to describe the bullishness of this market. Let me show you something. Remember we said if you have your A and your B, right? Let's say you have A, then you have B, right? It's okay for market to take out A and B way below here. And then this one that is taking it out, this leg that is taking it out, will now create higher highs and higher lows. I'll be lower highs and lower lows like this. And then break structure gives an inducement, break structure again, and then entry. So it's okay for market to do this, but it has to break structure here. And there must be an A. There must be an A, and there has to be a B, right? And the A and B must not have liquid other blocks. Something like this. If you see something like this, this is now a sweep inside here, a break, an inducement. If they have valid order blocks, it's a different thing altogether. This one doesn't have other blocks, it's just liquidities. Market comes, takes it out. That market that takes it out breaks structure. It breaks structure. Remember, you need to memorize this break of structure if you have to, right? It breaks structure, creates an inducement, and then what? Break structure again here. Break structure again here. Then this other block is valid. Whether or not it makes this overall break of structure here is relevant. As long as it has broken structure here, given this inducement, broken structure here again, it's valid. So look at where we have A and B. This is A. This is A. And this is B. And look at what market did. Market took out this B here, right? And then look at the movement from here, 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 here. There's an inducement here. Break, sweep, here, another break, and entry, right? Entry. This is our entry. These are liquidity that validated this other block here. Let's go to 4 hours and look at it again. Like you can obviously see that this market properly broke structure. Properly. Yeah. So this is the sweep here. and this is the break of structure. This inducement validated the other block. And the market came and took all of them out here. Market took them all out here. Right? Market took them all out here. So as soon as market is taking it out, you can start taking your entries. Yes, it's going to take a long time to get out of here, but it's still correct. So now let's look out for another A and another B. From what we've seen here, we have a higher high here, but there's no interconnecting, what they call it. So this could also be your A and your B. This could be your A, and this could be your B, right? And the market comes to take out that B, and then break structure. Like it creates a structure by making a sweep break of. So you can see the perfect break of structure from here. This. So you can see there's a sweep of liquidity here. This is our break of structure. This all this is our inducement, right? We have another break of structure, then we have our entry. It's even still it's just that it has gone a bit 5 minutes. It has even still been perfect to take this trade. Look at the confirmation I was telling you about. This inducement here. Look at this inducement. That's the inducement market is supposed to take out. But you can see that market took it out and did not induce it. It's supposed to induce it a little bit like this. Induce it before coming to sweep, right? But it didn't do that. So market still came back into the zone here to make that sweep. So it made the inducement sweep of liquidity. Look at the bullish engulfing here. This is a proper bullish engulfing. It's still early it's too early. It's still, I don't know if I would say it's a bit late to take this trade, but this is 4 hours. So this might actually make your SL to be just too high. So better to just ignore it. But before it gets to this, because obviously this is going to be our TP here. This is going to be our TP. In fact, our TP is way above that place. This is our TP for this trade. This is our TP here. This is our TP from here. So before it gets up here, it's obviously still going to create another buy structure for us. So continue to trade. It's obviously going to create another buy. So this is a perfect buy structure. Perfect buy structure. As it's coming up now, you want to see it do same thing. You check all the higher highs. And then check where it's swept a liquidity. It took out a B, right? Now, if it takes out a B and then comes here to break structure, you want to see an inducement that validates the other block. You want to see another break of structure, and then you want to see this. Right? First of all, identify the higher highs and higher lows. If it doesn't do that, you want to identify an A, you want to identify a B, then you want market to come down here and create a break of structure by doing something like this. Like this. Right? And then this becomes your entry here. So these are the different ways. It's the same thing. It's just to understand the concept behind it. It's practically the same thing everywhere. Everywhere. If we were to analyze all the charts of all the forex markets, it's the same thing we're going to look for. Once you get into your chart, start identifying the higher highs and higher lows. Once you're done identifying them, you look out for where there was a sweep of liquidity. So you have to identify where there's a sweep of liquidity. Once you identify that part, check if that sweep of liquidity has an order block that is valid, right? If it has, then that becomes your target. This one has a valid order block because of this inducement here. So if the market comes back here, down here, yes, we can continue to buy. Just look out for where the higher highs and higher lows. Don't forget about what is happening inside here. Just look out for the higher highs, all the highs. You're looking out for all the highs. Then check for where there is a sweep. Market has to make a sweep here. Market has to make a sweep here. Has to take out a high, a low, whatever. Take it out, create an inducement, then break structure. Or take it out. As it's taking it out, it's creating a break of structure for itself. Assuming this was our case now, once this is obviously our A here, and this is our B, and this is in general taking out. If you're going to break structure, you want to see it create this. It has to create lower highs and lower lows, and then create this before breaking structure. Then this becomes your entry, right? This is what we want to see. But now, it just swept this liquidity, gave this inducement, broke the structure. This is obviously valid. Obviously valid. Let's look out for V10 1S. This will be ending very soon. So after that, I'll wait for another, I think 10 minutes or so. Let's look at V10 1S and see what the market is giving to us. Again, just identify your higher highs and your higher lows and look out for where market is making a sweep of liquidity. It is as simple as that. When I say it's that simple, it's really, really that simple. Let's delete all of this. 46 joints. Let's delete all of this. Right? So if we are following this market the way it is now, where we see that there's a sweep of liquidity, there's a high here, right? So this is an A, this is a B, right? This is a B. And then this is where we have a sweep of liquidity. We have a sweep of liquidity here because market took out that high. You can see this high, it came into it. So market took out the high and then came here to create a break of structure like this. Like this. And then we'll have, hold on. Okay. So we have from here. Let's just check from here. One. So this is our sweep of liquidity here. This is our sweep of liquidity here. This is going to be our break of structure here. These are inducements. And obviously this is another break of structure up here. So we are supposed to be looking at for another block that is here for this next entry. That's what we're supposed to be looking at. You identify the higher highs and identify the higher lows. Check for where you can find a sweep of liquidity. It's as simple as that. Just check for where you can find a sweep of liquidity. So you can see that this is a perfect break of structure. Sweep, break, yeah, inducement, yes. So this is correct. So now this market is coming on a downtrend. Where can we see all our higher highs and our higher lows? That's what we're looking for. Where's our higher highs and the higher lows? Right? So we have a low here. We have a low here. We have another low here. We have yet another low here. If we go to 2 hours, you see, let me go to 2 hours time frame. So it's clear. You can see them. No matter how small they are, as long as they are going back into the zone, it's still a proper low, right? So this is where we can now see that this is our A. These are A here, and these are B here. So market took out B. And what did it do? Did it break structure? Let's check if it broke structure. That's all tell us that this is going to be an entry or not. So from here, we'll have this. We'll have this. We'll have this sweep of liquidity here. We'll have this break of structure here. We'll have this inducement here. And overall break of structure. So this is supposed to hold. It's supposed to, but I'll wait for it to take out this inducement inside here before I'll call the trade. He has to take it out. He has to come back and do something like this. Something like this. I don't trust it though, but That's the most likely thing that I'm seeing. That's the most likely thing I'm seeing. I don't really trust it, but it looks quite likely. Looks quite likely. So yeah. So the same thing. If we are going for an uptrend, we want to see where markets check out where markets made all the sweep of liquidities. So we had a break of structure here. We had a break of structure here. So market created the first high. Look at it here, this first high here, and then second one, and then you can see that this is where we had a sweep of liquidity here. Market made this sweep here, and then had this inducement here, and then came on top here and broke structure. So you can see as it broke that structure, it came back to take out this liquidity and then continue buying. The same thing, the same thing. We are looking for where market broke structure. All of these ones, you can see one, there's a high here, there's another high here, right? Another high there. Let's draw this properly. Another high here, right? Now we can see that there's a sweep of liquidity here. You can see that there's a sweep of liquidity here. Market came and took this liquidity out and then created what? An inducement here. And then it did what? It broke structure here. So what did it do? It broke structure, then came back to this place to take it out. But unfortunately, the it took out the one that seemed to be protected, which is still looking, right? It's still looking. It's not like you could have had too much SL from this. You couldn't have had too much SL. So the same thing again too. There's a sweep of liquidity here. You can see there's a sweep of liquidity here. Look at this sweep here. There's a sweep here. The market came into this zone and created what? An inducement and then broke structure. So this other block here is valid, still valid. If market comes back here soon, this is where we're going to be taking the next trade. So once you open your chart, just mark out all the higher highs, higher lows, and then check for where there was a sweep of liquidity. That's all. Just check where there was a sweep. Once you find the sweep of liquidity, you find an inducement into that, like this inducement now. Then obviously this is your break of structure. That's what you're looking for. Once you see any of this, if you see